So tell me the truth, when it comes to investing, do you believe that greed is good? If we're being honest, greed does have a part to play in what drives us to beat inflation and grow our wealth. But guess what? Being greedy and being green aren't mutually exclusive, and that is exactly what sustainable investing is. It's the intersection of earning a profit while doing good for the environment. To bust the common misconception, going green does not mean you are getting the shorter end of the stick. In fact, you might be getting more. Stick around, and in a few short minutes, I'll tell you how. If you're new to the channel, my name is Elliot. I'm a long-time investor, financial advisor, and educator. Please do like and subscribe to stay on top of the new content, and now let's get into the video. The idea behind sustainable investing is very simple. You stay away from investing in industries that cause harm to the environment or people, such as oil, gas, coal, chemicals, and weapons, just to name a few, and also what causes harm on an individual level, such as alcohol and tobacco. Instead, you focus on companies and industries that work with clean energy and other non-polluting initiatives and technologies, as well as those who prioritize good working conditions and the health and safety of their employees. You also focus on the company's governance to make sure it doesn't engage in bribery, corruption, excessive political lobbying, and other such factors. Taken together, this is called ESG investing, which stands for environmental, social, and governance. It's a common term in the investing world and one you'll hear me use in this video. Now, with all of the above qualities in mind, ESG investing also needs to make money, and these ventures have to be profitable. You are, after all, investing and not contributing to a charity. And that is really the big catch here. Can you have it both ways? The answer is that you absolutely can, and here are two major reasons why you should. First off, companies who adhere to ESG principles are on the forefront of this movement and have first mover advantage in building goodwill and reputation in the sustainable field. While it seems the green energy revolution comes and goes depending on the political mood of the country, overall the trend is towards sustainability, and companies that position themselves now will be able to reap the profits down the road. The second reason is risk management. Sustainable investing can be seen as an evolution of traditional investment principles of maximizing shareholder value and minimizing risks. How so? Well, for example, investing in a company with low ESG standards may expose the portfolio to a variety of risks, such as worker strikes, litigation, and negative publicity. This in turn might result in lower future returns. In other words, considering the ESG credentials of an investment can lead to better risk-based outcomes. Now, if you're sitting there and shaking your head thinking that you want to do sustainable investing, but you just don't have the time or energy to research how much value a particular company places on ESG, well, the good news is that you don't have to. As with a lot of niche investing, someone else has already done the research, and there's likely a mutual fund or ETF out there that may be exactly what you're looking for. These funds have professional analysts who do the research, so you just need to find a fund that fits in both its approach and historically good returns. To get you started, I've listed two well-known ESG ETFs. They are cross-referenced for best returns and lowest expense ratios, keeping in mind that a lot of ESG funds are actively managed and the expense ratios will be a bit higher than a typical passive fund. As always, do your own research, and I'm not in any way endorsing these funds, rather just letting you know what's out there. The first fund to discuss is the iShares ESG Aware ETF, ticker symbol ESGU. This $14 billion ETF invests in 280 companies, nearly all American, that are operating in a way that aligns with general ESG goals. It has a very affordable expense ratio of 0.15%, and its returns since inception are 14.76%, which is close to the benchmark market average. So you're getting market returns while also investing in only those companies that align with ESG. The second fund is a somewhat similar idea, the Vanguard ESG US Stock ETF, ticker symbol ESGV. This $10 billion ETF replicates the well-known FTSE USA All-Cap Index, an index of major US corporations, but excludes companies in the alcohol, fossil fuels, gambling, nuclear power, tobacco, weapons, and adult entertainment industries. It has a low expense ratio of 0.09%, and its approach is profitable, with its 5-year annualized return sitting at a market-beating 15.7%. Now, there's something interesting to point out here. If you focus narrows to just investing in green energy funds with no other consideration, turns out that isn't quite as profitable. As an example, there's a fund called iShares Global Clean Energy ETF, ticker symbol ICLN, and it only invests in companies from the clean energy sector such as solar and wind. Its 5-year annualized returns sit at 7.3%, which is a significant underperformance of the market. The lesson here is that if you wish to engage in sustainable investment, it's best to invest in funds which mirror the S&P 500 or a similar index, but also exclude companies from objectionable industries, which is exactly what ESGU and ESGV do. They do also have great energy companies in their holdings, but if you consider that sector sector by itself, it only gives moderate returns as it's still a maturing industry. That isn't to say, however, that there aren't profitable individual companies out there in the green energy space. One that you may want to look at is Next Era Energy, ticker symbol NEE. With a market cap of $139 billion, they're a leader in solar, wind, and green hydrogen technologies. Another one is Brookfield Renewable, ticker symbol BEP. They're another leader in hydroelectric, solar, and wind power. As I said at the top of the video though, these individual stocks will require some research on your part, and you won't be as diversified as you would investing in an ESG ETF, so my recommendation would be to stick to them. Okay, that was a quick introduction to sustainable investing, and as you can see, there's money to be made in investing green. Both ETFs I profiled and the two green energy companies have had profitable returns for investors, and if you pick carefully, you can certainly find other investments that are both good for the planet and good for your portfolio. As always, if you enjoy this content, please do like and subscribe, and I'll see you in the next video.